Are there parts of the market, though, that are attractive from a valuation standpoint that you are starting to nibble at now, Jenny?
So I haven't initiated any new positions in the last few weeks, but what I've been doing is looking at the list of companies that I have. So my shopping list is more like my portfolio and what positions in there have become undervalued that are particularly attractive right now. And what I'm looking at is where I'm going to need to sell some things that haven't performed and won't, and where I'm going to repurpose that cash. So my shopping list is some of the good old favorites, and those are things like some of the pharma companies like AbbVie and Pfizer, companies like Duke or PPL or IBM or AT&T and Verizon. These are companies that have paid dividends for a really long time, that are trading at rock bottom valuations, even if earnings do trend down a little bit. So my shopping list is what's already in the portfolio. That being said, I've had companies pop up on my weekly screen. Sorry, am I losing connection or am I okay? All right. I've had companies that pop up on the weekly screen that I've never seen on there before. Things like UPS and Cisco and 3M. We're starting to initiate the research process on those. They are not on the shopping list quite yet, but they could make their way on there. They're really compelling out there.
All right. So Jenny, I mean, you're a value-focused investor as well. Michael Farr, I want to bring you into this conversation right now. Jenny brings up a good point about putting some of those names on lists. These are names that are already on there. Goldman Sachs and David Kostin's team has put out an interesting note with regard to some of the big stocks that could be passing some of those screens on there. Also, Cole Hunter and his group over at Goldman Sachs putting out some of those dividend plays that they see. They're looking at some of the 40 companies that they've identified with a median annualized dividend yield of 4%. They've also had investment-grade issuer ratings and a track record of 90 consecutive quarters, or around 23 years, worth of dividend payments without a cut. What you're seeing right there, and for listeners out there who can't see it, we have a wall graphic showing some of the high-yielding stocks with what Goldman calls, quote-unquote, safe dividends. They're names like 3M, Johnson & Johnson, Merck, Emerson, Home Depot, Bank of America, Cisco, Cummins, you name it, they're on there. Cummins, you name it, they're on there.
The way the show opened and the way you went from Joe to Steve to Jenny was about perfect in the messaging for viewers and for investors. Joe's message is the one underlying everything every investor needs to be thinking about right now. We need to know what we don't know and that we don't know. Dr. Fauci said pretty much the calendar is going to be driven by the virus and not by anything external. And so we have to actually stick to our discipline through this very emotional period. I think Steve was talking about how he approaches it, and then Jenny talking about how she implements her discipline, which is key, because discipline through these uncertain times. So, yes, we follow our discipline to find companies with really solid balance sheets. Those that have gotten really hit, if I can buy something at a 30 or 35% discount from its highs, where I think the fundamentals are still sound, where there's still cash flow, where they don't have too much debt. At some point, and I've been saying this for a lot of years, and I've been wrong about this, with this much cash churning through a market, $2.2 trillion from the fiscal side of the house, and who knows how much still coming from the monetary side of the house and the Federal Reserve, there's going to be some sort of inflation at some point. It's down the road. So all dividend stocks aren't good just because they have a good dividend, but if they've got a solid balance sheet and they're increasing, some of these blue chip names are fabulous, particularly if their businesses are sound. So at Johnson & Johnson and Abbott Labs, even a Microsoft, there's a great long list, and I'm a big fan of them, but not just for the dividends. There's some great companies out there for the dividends, 2%, and it's still going to be great to be able to buy it. I think we're going to have more time. I'd like to think we've made the lows. I'm not sure that we have. I'm not sure that we haven't. But this seems to be a much longer process than most on Wall Street would like. We want it over, and we want to get back to investing. And this virus isn't working that way. So you got to be patient.